Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glen Sutherland.
Sounds good. Welcome to a new episode of A Canadian Investing in the U.S. This week, my guest is Bobby Casey. Bobby, do you want to start off by introducing yourself to everybody?
Sure. So first of all, Glenn, thanks for having me. Should be a fun conversation. We had a little pre-conversation, so it should be kind of interesting. So background, I am American. I'm originally from North Carolina. At this point in my life, I'm pretty much nomadic. I call myself kind of a slowmad, so to speak. I have 3 home bases. I have a place here in North Carolina where I'm originally from. I spend a little bit of time here during the year. I spend most of my winter times in Mexico. I have a place down there, and then I have a place in Europe, in Latvia, which is where I spend most of my summers. And I've probably lived in, I think I've lived in 10 different countries. I've legally immigrated, I think 6 or 7 countries now, where I've actually legally become like a legal resident in 6 or 7 countries.
Well, just saying that leads me into like just curiosity. Like, if you're, formally become a resident of certain places, what does that do to your status as an American?
Nothing. It doesn't change anything. Do you mean like from a tax perspective or just from a legal residency
perspective? I know whenever, like, for instance, when Canadians are like, if they went and lived in North Carolina or lived in Florida for, more than 6 months, it affects a whole bunch of things. It affects the way their taxes are done. It means that they're going to have to pay taxes on when they sell, HST is going to start coming into play when they sell real estate, whereas it wouldn't if it was their home residency before. And, their health care is going to get affected by being out of there. I was just curious if any of that stuff is...
So if you want to, I'll hit on the Canadian topic since you brought this up. I have, in my consulting practice, I work with a lot of Canadians. To be honest, people think because I'm American, I work exclusively with Americans. To be honest, I have more Canadian clients than Americans. Yeah. My consulting practice, I've been doing this. I'm an international tax lawyer. I've been doing this for more than 20 years. And what I do is I work with location independent entrepreneurs that either live outside of their home country or they have business or investments outside of their home country. And what we do for those clients is we help with optimizing company structure, tax optimization strategies, residency planning. So that's a key point you mentioned there, what happens for changing residency. And then asset protection planning with assets and business and stuff. But to answer your question specifically about me, I'll hit on Canadians next. As an American, we are unicorns in the global landscape when it comes to tax planning. We are actually one of only 2 nationalities where we have citizenship-based taxation. So Americans are taxed based on their citizenship, no matter where they live in the world. So if an American leaves the U.S., let's say moves to Thailand, for example.
Yeah, that's common.
You still have to file and pay taxes in the U.S. Now, there's a lot of loopholes. There's the Foreign Earned Income Exclusion. There's foreign tax credits, and there's a few other loopholes you can take advantage of with offshore businesses and offshore structures and that sort of thing. But you still have to file and pay taxes, which makes it a little complicated for Americans, whereas Canadians have it much easier. If a Canadian wants to leave Canada, it's actually really easy for you to give up your tax residency. There are some hoops you have to jump through. When you file your final tax return, you have to inform Canada that you've left and where you've gone to. But that's pretty much it, as long as you kind of eliminate your primary residential factors in Canada. The 3 primary residential factors in Canada are having a primary residence, a spouse, or dependent children still living in Canada. So first of all, it'd be kind of weird if you left Canada without your spouse and kids. So that would be odd, but people do it, I suppose.
Yeah.
So you're probably going to take them with you. I mean, if you like them anyway,
if you like them, yeah.
I don't know. Maybe you hate your wife and you want to leave her. I don't know. But or maybe your kids are little assholes and you don't want them around. I don't know. It happens. but generally it's easy. If you, as a Canadian, you want to give up your tax residency, you just have to give up your primary residence and take your wife and kids with you. You know, I didn't mean that in a sexist way, but you and I are both men, so you take your spouse and kids with you. So it's pretty easy for Canadians to give up tax residency in Canada. There are things you have to do if you've got assets. There could be an exit tax depending on a few different factors. You mentioned having a home. If you leave Canada, you still have a home. It does change the taxation of that home when you sell it. So you have to make a choice there. Are you willing to pay tax on it when you sell it instead of giving that primary residence exclusion, or just sell it? You know.
Yeah. So I would think in most situations it makes more sense to dispose of them while you're still here than.
Are you interested in investing in the U.S.? I honestly see Canadians making tons of mistakes, simple mistakes that could be avoided by just a quick phone call. Honestly, I think we should just get on a 15-minute call. You ask me some questions, I answer some questions, and I tell you a little bit about the coaching program. We see if it's a fit. My coaching program is completely different than other people's. What my goal is to help you actually implement the material. All the videos are pre-recorded, so you can just zip through those on your own time. But when you're actually buying property, this is what sets me apart, is that we actually sit down, you do your deal analysis, you have questions, ask me some questions. Let me go through it with you. Let me help you. And this is what's going to set it apart. This is why you're going to avoid mistakes. You're going to miss those little things that you just missed that could cost you a lot of money. Maybe I can see it. Maybe my experience. I've been doing this for a while down in the U.S. Let me help you. Let's do a quick 15-minute call. If that's of interest to you, go to glensutherland.com and you can book a 15-minute call. Anyway, hope this is helpful. Thanks, everyone.
It does. Like, I have a client right now. I've been working with her for about 6 months. She's Canadian. She is from Ontario, and she has a massive property, like 100-acre property with this amazing off-the-grid house, like multi-million-dollar property. And she's left Canada, but she didn't want to sell the house, like, because she loves it. It's a beautiful property. It's a great getaway place. She still spends a couple of months a year there. And she can do that without being a tax resident. But the way that house gets treated for tax purposes is treated differently than as if it was her primary residence. So at some point, she'll have to pay the piper on capital gains tax and all that stuff when she sells it. But she's willing to pay that price because she also makes a lot of money. And now as she's exited Canada, we structured her business in a way that it's not connected to Canada. So she makes a lot of money and pays no tax in Canada. Actually, she pays no tax anywhere because she's nomadic and doesn't have tax residency anywhere.
Yeah. So in that case, like, if at some point she decided to move back to Canada, could she then regain those benefits?
Yeah, it happens all the time. And she probably will, to be honest. This in this case, this particular woman, she's I think she's like 55, I'm guessing somewhere around there. Yeah. And I mean, she probably, when she gets older, she's probably going to go retire to this place in Ontario. I mean, it's an amazing off the grid house. Like, she showed me pictures. She's got like solar panels, a propane generator. She got 3 wells on the property, Starlink internet. I mean, it's completely, totally off the grid, and it's an amazing house. Like, it is beautiful. Like, she's got a huge barn, got all the, outdoor stuff. I think she has she's an outdoorsy girl. She's got like quads and snowmobiles and stuff there. So,
yeah.
But yeah, she can go back. No problem. You just, the thing that gets confusing, and to be honest, what most, even Canadian accountants don't understand. I can't tell you how many times I've worked with Canadian clients who went to their Canadian accountant, and their Canadian accountant gave them completely wrong information about what it takes to exit Canada and what it takes if you go back. So, like, one bad piece of information very often a Canadian accountant say is if you leave Canada, you have to become a tax resident somewhere else, which is not true. You can be nomadic. I have hundreds of Canadian clients who are fully nomadic and are not tax resident anywhere right now that have no issues whatsoever. So it is legally possible. But they say if you don't have tax residency somewhere when you go back, or if you go back to Canada, you're going to hit a tax problem because Canada is going to want to know where you paid tax while you were gone. But that's actually not true. That's nowhere in Canadian tax law that you have to be a tax resident somewhere while you're gone. When you exit, you're done. You broke away free and clear. When you go back, you have rights of residency as a Canadian citizen your whole life. You can choose to exercise that right of residency, or you can choose to not exercise it. If you choose to not exercise it, you lose some of those benefits, like your national health care.
Yep.
But if you're not living there, why do you care? You don't need national health care.
Go to a doctor or a surgeon there because you don't live there.
Yeah, so you give it up while you're gone. Okay, so I'm not there. Great, I give it up.
Yeah,
but you can go back easily. All you do is basically you basically re-register. Essentially, you're re-registering with the healthcare system, and you file a tax return that first full year you're there, effectively telling the CRA you're back in town, and that's basically it.
Do you find that there's any Canadians that just when they're like, hey, I'm ready to exit, but the place I'm going to go to, I'm going to pick strategically for taxes or for a specific reason like that?
It happens. I do have a lot of people that do that because, as you well know, Glenn, tax rate in Canada is exceptionally high.
Yep.
And I have a lot of clients, Canadian clients, that are just so fed up with that tax system. They literally choose the place they want to live based on the tax situation there. To be honest, though, now, of course, this is my narrow niche of who a lot of my clients are. But to be honest, most of my clients they have an online business or they have investments or whatever. And they don't they tend to be a little bit nomadic. Like maybe they go live in Costa Rica for 6 months, and then maybe they go live in Mexico for 3 months, and then maybe they go back to Canada and spend the summer. But you can spend, if you exit the Canadian tax system, you can actually physically be in Canada up to 182 days a year without becoming a default tax resident back in Canada.
Right.
As long as you still you minimize your significant residential ties. Okay, if you go back to Canada for 180 days and then you register a company or you go get a job and you put your kids back in school in Canada, well, that's a different thing. Then you have those significant residential ties again back in Canada. But if you remain nomadic, you have your own online business that operates out of Canada. You go rent a house for 3 months in the summertime, and if you got kids, your kids are homeschooled or online schooled. So you're not recreating those connecting factors. Then you can easily do that. That's what most of my Canadian clients do. They spend about 3 months a year in Canada. They usually have a home base somewhere else, very often Latin America. The most common ones are Costa Rica, Mexico. I got a few that are in Europe, like Portugal is common, Spain's common, Croatia's getting more common.
I've heard about some people wanting to do Belize as well, just because of the English to it. And I don't know if that's common. Maybe it's not that common yet, but I know that some people are like, hey, I want to be able to. I don't speak much Spanish, so.
So I used to live in Belize. I will, if you care, I'll give you my quick feedback on Belize. Yeah. I hated it. I absolutely hated Belize. Oh. Now, I lived on an island. I lived on Ambergris Caye.
Sounds good.
Yeah. It's okay, but the problem living on these small Caribbean islands is Ambergris Caye, what's the name? It's been 10 or 12 years since I lived there. It's San Pedro is the town on Ambergris Caye. I lived in San Pedro on Ambergris Caye. And to me, it's a nice place to go on vacation, especially if you like snorkeling and diving and that sort of thing, because it's beautiful water. The water is amazing. You go out in a boat. You're not very far out to the blue hole if you want to go diving and stuff like that. But to live there, it's super tedious. Everything's crazy expensive. It's hard to get. If you're used to normal Western living, like you live in Canada or the U.S. or Europe or something like that, it's hard to just get normal things. You want to go to the store and buy, peanut butter. You can't. It's just that stuff doesn't exist. your cell phone bill in Belize, like this is like 12 years ago. My cell phone bill in Belize was like $200 a month. Like, because there's one cell phone carrier for the whole country. So they charge whatever the hell they feel like. If your car breaks down and you need to get a new alternator, you're probably going to wait a month before that alternator shows up. Like, you can't just run down to the auto parts store, pick it up, and put it on, or take it to the nearest garage, because you'll have to order the alternator and it'll take a month to get it. Like, little things like that made it super annoying to live in Belize. I mean, the weather's nice. English does make it convenient. Belize is also not a very safe place to live. Like, it's a little sketchy.
I was there I stopped in at it for a cruise, and I was like, there's some rougher looking spots.
Belize City is pretty rough. I would never live in Belize City. If I was going to live in Belize, it would be one of the islands, or I forgot that town down in the south. It's okay. Yeah. But Belize City is, no thanks.
Well, you just mentioned different food and different things that you miss out on. Like, you're living part of the year in the U.S. and Carolina. You get part of it in Latvia and part of it in Mexico. Are you finding there's things you're missing when you go to different places? Like, even if you go to Mexico, are you missing American stuff? Or when you're in the U.S., are you missing Mexican stuff?
When investing in the U.S., Canadians make so many small mistakes. They assume everything's the same. They don't understand all the intricacies. If you just would like a free guide on some of the common mistakes that I see Canadians making, just go to CanadianInvestingInTheUSA.com/mistakes and check out my free guide. And while you're there, if you want to book a phone call, I'm open. Me personally, not some other person. I'm personally open to doing a 15-minute phone call with anyone, answering some questions, sharing some experiences. So if that's of interest to you, please go ahead and do so.
To be honest, it's more when I'm in the U.S., I miss Mexican food. Now, of course, there are Mexican restaurants in North Carolina, but Mexican food outside of Mexico is not really Mexican food. Like, I'm sure you have, in Canada, you have Mexican restaurants, right? And have you ever been to Mexico?
Yeah. Oh, yeah. Several times. I got married in Mexico.
Oh, yeah. Okay. Yeah. So, if you have tacos at a Mexican place in Mexico, that is a very different experience than going to have tacos in Canada. Like, it's
it's totally
it's different. Almost not like, it doesn't even feel like the same genre of food. It's like, is this even really Mexican? So I miss Mexican
atmosphere
food.
too. You taste the atmosphere around you. It's you can go to a restaurant that's run by people from Mexico in Canada or in the U.S. and it has a different feel.
It does. Well, partly I think it's the quality of food and the type of ingredients they get. So in Mexico, the tortillas are just made differently. I don't know how to explain it. They're just made differently. And when they put the tomatoes on there in your salsa or whatever, the tomatoes grown in a tropical climate are different than tomatoes from North Carolina. Like, I might get tomatoes in North Carolina from a tropical climate, but they're shipped in and they've been in trucks and boats and trains and whatever to get here. Whereas in Mexico, they were probably grown at the nearby farm because it's a tropical climate. They grow tomatoes everywhere there.
Right.
What about? I do miss some things. But actually, the way my lifestyle is, people ask me all the time, what do you like better? Do you like Mexico better, Latvia better, the U.S. better? And I like a lot of things in different places for different reasons, which is why I kind of move around, because it's like, I get the thing I like when I'm in Mexico. And then I'm like, you know what? I really miss I really like the weather in Europe in the summertime. I miss that, cobblestone streets and the beautiful architecture and the completely different cuisine. Okay. Then I'll go to Europe for the summer. And then I'm there and I'm like, you know what? I miss tacos. All right. So I go back to Mexico,
So when you're in these different countries, do you own the properties, or do you rent when you're I'm thinking Latvia. Because I don't know a lot about Latvia, but whenever I think about Latvia, I think about close to Russia, and I think as North Americans, I believe it's very difficult to purchase over there.
Not in Latvia, no.
No. Okay. See, I don't know anything about it. That's why I'm asking this question.
No, funny thing, it's much harder for you to purchase in Mexico than it is in Latvia.
Okay.
So that's a good point, though. When it comes to real estate, every country has different rules when it comes to foreign ownership of real estate.
Right.
Like Mexico, for example, foreigners, basically anybody without a Mexican passport cannot own property in their own name within 50 kilometers of the coast or 100 kilometers of the border. So you want to buy something in Mexico City as a Canadian, no problem. You want to buy something in Cancun or Cabo or Tijuana, you can't, not in your own name, because it's in that zone. You're not allowed. Now, there are ways to go about it. There's what's called a fideicomiso, which is a trust, a bank trust, where you have a trust with the bank as the trustee. So you can own it in a fideicomiso and you're the beneficiary of that trust. You can do that, or you can register a Mexican company to buy that property. That's possible. That's a little bit more complicated. Most people do a fideicomiso. So you have restrictions on that in Mexico. Whereas in Latvia, if you want to buy an apartment or a house as a foreigner, there's zero restriction on that.
Yeah.
Now, if you wanted to go buy like farmland or forestry land, there is restrictions on foreigners in most of Europe, by the way, on buying farm or forestry land. It's not impossible, but like, let's say you wanted to go buy farmland in Latvia or most of Europe. You want to buy farmland, like you want to go buy this 400-acre property that's a designated, zoned and designated farmland. Well, you could do it as a Canadian if you can prove you have an education in farming, like you actually have a formal education in farming and you have some experience in farming, and you present a business plan that you're going to actually farm that land. Because, Latvia is a small country, so they want to make sure if they have farmland, it continues to be farmland.
Right.
You know what I mean? Like, and some people might say, I want to buy the land and just not farm it. I'm not going to build condos or anything. I just don't want to do farming. But they want to make sure they're continuing to produce, whatever that zone or whatever that area is producing. So there are some restrictions on that when it comes to foreign ownership. But if you want to go buy a house or an apartment or something in Latvia, yeah, there's no problem. You could show up and hand them the money and put it just like you do in the U.S. or in Canada. You open an escrow account.
It's something where you'd actually have to buy it in cash, or will they give you a mortgage?
You can get a mortgage.
Yeah.
I have 2 mortgages right now in Latvia.
Okay.
You can get a mortgage now. If you get a mortgage as a non-resident in pretty much all of Europe, they're going to require you to put a higher down payment down.
Yeah.
Whereas, if I were a Latvian citizen and I go buy a house, I could probably do it with 5 or 10% down, just like you can in the U.S.
It's saying the same thing. Like when an American comes to Canada, they're not going to get the same leverage as a Canadian in Canada. And same thing when Canadians go to the U.S., they're not going to get the same leverage.
Yeah.
Unless you play
It's
the
the same
game.
thing.
You got to get immigration status and social security number and all this stuff. Then you might be able to play ball. But yeah, you're going to have to take a little bit of a haircut somewhere because honestly, it's from the lender's perspective, it's more risk, right? It's more risk.
One of my apartments I bought in Latvia, I had to put 30% down, and my interest rate on my mortgage was a few basis points higher than what I would have if I was a Latvian citizen. Because as a Latvian citizen, you're probably going to be a tax resident. You're going to have legal source of income. You're going to have a Latvian tax return. They can easily see your proof of income and all that stuff. As an American coming in, I don't have any legal source of income in Latvia, so they can't easily verify it. So they want a little bit extra cushion. So I have to put 30-40% down and pay, a few bips higher on the interest rate.
It makes sense.
But to answer your original question, I own my apartment in Latvia that I live in.
Yeah.
In North Carolina, I own a condo here. In Mexico, I do not own, but I don't want to own. I'm not interested.
That's fair, right?
Too many maintenance issues. I live 2 blocks from the beach,
Yeah.
and you got a lot of maintenance issues with coastal property like sand, seawater. mildew, mold,
Oh,
and
yeah.
I'm not there
Yeah.
all the
It's only there
time.
a third of the year. Yeah.
I don't want to come back like 3 months later and like all my walls are moldy and my air conditioning's broken
No.
and the toilet doesn't work because I was gone for 3 or 4 months. So it's much easier for me to rent. And I rent in this, when I go there, I rent in the same building every time because I have the property manager. I'm friends with the property manager. I just call her up and say, hey, find me an apartment in the building for the next 3 months or 4 months.
And that's all
And
furnished. That's cool.
it's all furnished, everything. If the air condition stops working, I send her a text message, fix the AC. Somebody shows up that day or next day to come fix it. I don't, yeah.
Awesome.
It's funny, like as I have real estate investments,
Yeah.
and I do own those two places, the Latvia and U.S. place.
Yep.
But for the most part, I actually believe it's better to not own the home you live in.
I've heard that. Yeah, I've heard that. It also can, well, I don't want to go on that whole rant, but sometimes it's where you're located in residency as well. Sometimes you don't want to own it. And also it depends, I think, on the price point of the house too, right? What makes
Sure.
sense.
So, like one of my buddies is a huge real estate investor in the U.S. I mean, he owns probably 5,000 doors, and his thing is he'll never own the house he lives in. The reason he says is because the places he wants to live are really nice. I mean, he makes a lot of money. He has 5,000 doors, like it's a lot, and the places he wants to live are really nice. But he said he can rent a high-end place so much cheaper than the cost of purchase, like the acquisition costs and everything and paying the mortgage and all that stuff. Like he showed me one place he was in Scottsdale, Arizona. He had this beautiful penthouse apartment, like 4-bedroom, amazing place. It was probably, I don't know, I'm guessing it had to be like a $2 million apartment. And he told me he was paying $5,000 a month rent. For a $2 million apartment, he was paying $5,000 a month. He said,
I would be way more than that.
Yeah, he was like, I'd be an idiot to buy this place if I can rent it for $5,000 a month.
Right.
Why would I ever buy this thing for $2 million if I could rent it for $5,000 a month? He said it just makes no sense.
Yeah, I also wonder if there's any liability to that too, because if you don't own stuff, then there's nothing to go after if someone did find you negligent on something too. I don't know.
Well, I specialize in asset protection, so there's a whole world of protecting assets when it comes to that stuff. Yeah. You can protect yourself if you own your own home too. You just got to own it in the right way. Like I don't recommend anybody owning their own home in their own name. I think that's just crazy to own your own house in your own name. I don't even own a car in my own name.
Yeah,
like, I don't
own my truck in a company name, so at least I did that thing right. I do own my own home though. Anyway, I have to work on that. Bobby,
Sure.
Before I let you go, you want to tell people some of the services you can do if they're like, hey, this guy sounds like he knows what he's talking about. Maybe I could reach out. But what can you do for them? What are some of the different services?
Sure. Yeah, like our core business, it's businessanywhere.io, and you're welcome to put the links in if you'd like.
Sure.
But it's businessanywhere.io. We are a one-stop platform for anybody starting a business in the U.S. Excuse me. So we do U.S. company formations. We're a registered agent in all 50 states plus the territories. We can help with your bookkeeping, tax filings, opening bank accounts, getting your tax ID, your EIN or your EIN or I-10, anything, any company compliance stuff related to your company. So like a lot of real estate investors, I mean, especially real estate investors in the U.S., they need LLCs because if you go get a investor mortgage, generally investor mortgage companies require the properties to be held in an LLC. So a lot of our clients are real estate investors. One of the big benefits we offer for real estate investors, especially people who have multiple properties and multiple entities, is we fully automate all your state compliance. Like you don't have to do any filings with the state. Our software automatically does it. So like filing your annual report, paying your state fees, renewing your registered agent service, our platform fully automates that. You get a notice that your LLC is up for renewal. If you want to renew it, that's it. You can ignore the email. If you want to cancel it or dissolve the LLC, then you need to log into your dashboard and hit either the cancel or the dissolve button. It's actually that easy. There's a yellow button for dissolve. There's a red button for cancel, and that's it.
Easy peasy.
Our business, it's funny. So I'm an international tax lawyer. I've been doing this for more than 20 years. And over the years, one of the things we recommended for our clients, especially like our digital nomad clients, because if you're a digital nomad, meaning you're traveling and living outside of your home country, a U.S. entity like a U.S. LLC is generally the best option for you for registering your company, for ease of use, for banking, for payment processing, and for taxes. I don't want to go into all the detail there, but it's generally the best structure. Even like if you're a German living in Thailand with a software company, your best company structure is going to be like a Wyoming LLC, because you basically would pay zero tax. You have one annual report filing every year, and that's it. Like, it's insanely easy. So because I was recommending clients to register companies in the U.S. for years, we basically got tired of recommending people to go to other people. So we just started that company, and then I built it from the ground up as a software platform that automates all these things for you. And so we're kind of like a SaaS business in that regard. Like, we automate so much with your company structure stuff.
That's interesting, because even just saying, like, I know the advantages of using like a Wyoming or a Delaware LLC, but like it's interesting if you're a nomad and not living in the U.S. to do that. You think that you'd almost want to pick an entity structure that's in a different country, just so that, because you said that with the U.S. it's you don't get to give that up by living in a different country. So
as an American citizen,
as a citizen, right? So
as a citizen,
your personal taxes, you're talking are going to be different than the corporate taxes.
Now you're conflating some ideas here. What I'm talking about, if you're a non-U.S. person, if you're a Canadian or you're a German or you're a Italian or you're Chinese or whatever, and you're nomadic. So we'll use a Canadian here. Let's say you're a Canadian living in Costa Rica.
Okay.
That's actually a great example, because a Canadian living in Costa Rica, first of all, you should exit the Canadian tax system so you pay no more Canadian tax. You don't file anymore. You don't pay anymore. And let's say you had just like a consulting business, like something that's completely in the cloud, like you sitting at home working from your spare bedroom. Maybe you got a virtual assistant in the Philippines, or maybe you got developers in Serbia or whatever.
Yep.
But your business operates like fully remote. You're parked, your butt sitting at your house in Costa Rica. By far, the best place for you to register your company is an LLC in the U.S. The reason being is a U.S. LLC, the default tax election of a U.S. LLC is disregarded entity for tax purposes, meaning the entity doesn't pay tax. So just for math's sake,
a flow through, right?
It flows through, right? So let's say you got a Wyoming LLC that makes $100,000 a year. Glenn, you're the owner. You're the Canadian living in Costa Rica. So that means Glenn, as an individual, earned $100,000 a year, right?
Right.
Well, your business doesn't have what's called ECI, which stands for Effectively Connected Income to a U.S. trade or business. And practically what that means is you don't have an office in the U.S. You don't have a warehouse in the U.S. You don't have any employees in the U.S., like actual employees where you're withholding payroll tax. I don't mean contractors. I mean employees.
Yeah.
You're not performing physical work in the U.S. Like, you're not a plumber driving around fixing pipes in the U.S.
Right.
You're not physically doing anything in the U.S. All those things equate to ECI, or Effectively Connected Income. Your business happens in the cloud while your butt is sitting in a chair in Costa Rica. So what that means is all that profit flows through to you.
Yeah.
And in the U.S., you're not a tax resident. Like, you don't have a green card. You don't have a U.S. passport. You're not a citizen. So you don't have a tax obligation in that regard, because you're not a tax resident. And the business itself doesn't have that connected income, that effectively connected income to a U.S. trade or business. So what that means is you only have to file one report every year, with technically two forms. You have to file by April 15th every year. And all you're doing is telling the IRS that business is owned by a foreigner. And that tells the IRS the nature of the business, and it's owned by a foreigner. So there's no tax obligation in the U.S. And in Costa Rica, this is a great example, by the way. Costa Rica is a territorial tax system, meaning they only tax the income you earn. If you're a Costa Rican resident, they only tax the income you earn in Costa Rica.
Okay, so then it's not earned in Costa Rica; it's earned in the cloud, or
so you pay zero tax anywhere. Actually, you don't even file taxes anywhere, because if you're Canadian and you've exited the Canadian tax system, you've ended that obligation of filing and paying in Canada. In the U.S., you do have that 2 form you have to file, but it's an informational filing. It's not a tax return. All you're doing is informing the IRS the company's owned by a foreigner. And in Costa Rica, you don't have a filing obligation because your income is earned outside of the territory of Costa Rica. So completely, fully, totally, legally, you're zero tax on your business, your personal income, your business, everything. So the U.S. is by far the largest tax haven in the world. Like, if you take all the other tax havens combined and you add up assets in those countries, it is a fraction of the foreign money held in the U.S. because of the thing I'm telling you right now. Because the U.S. is the biggest tax haven in the world for anyone except Americans. It's literally a system designed around attracting foreign investment. It's an incentive for you to do business in the U.S. because all you do, let's say you have a business using your example, you've got Glenn, Canadian, living in Costa Rica with a Wyoming LLC.
Yep.
Okay. They actually don't care. The U.S. doesn't care if you pay tax or not, unless, of course, you have that ECI in the U.S. But what they really like is when you are using U.S. services and your money flows through the U.S. So if you had a business making, I don't know, let's say $1 million a year, or let's make it even simpler. Let's just say you put $100,000 in your bank account in the U.S.
Okay.
Well, if you understand the way the fractional banking system works, you put $100,000 in a bank account in the U.S. Well, that bank can leverage that money 10 or 20 to 1, depending on their reserve requirements, depending on how they test. Okay, so they can leverage that up 10 or 20 to 1. So your 100,000 turns into $1 to $2 million of loans for, let's say, Bank of America, for example. Well, who are the people that get those loans at Bank of America? Well, those are U.S. taxpayers. People buying houses, buying cars, investing in business. All of those things have a tax consequence.
Yeah.
So you just by you as a foreigner putting $100K in the banking system in the U.S., you just gave the U.S. banking system $1 to $2 million that they can go after for Americans on taxation.
Okay. That makes a lot of sense.
So they literally give foreigners the incentive to put money in the U.S. by not taxing you on purpose. Because otherwise, if you were that Canadian and you knew you were going to get, let's be honest, the U.S. tax system is exceptionally complex.
Yeah.
If you're a taxpayer. Okay. So as a Canadian, if you were going to have to go in and pay U.S. tax on that, I forgot, what did we say? A consulting business? I forgot what we said.
It doesn't matter.
Well, it doesn't matter. Let's say consulting business. So if your option was to put it in the U.S. with probably the most complex tax system in the world, or put it in somewhere else, Mexico, for example, which is much simpler, you're not going to choose the U.S., but you would choose the U.S. because you don't have to pay tax. And technically, you're not even in the tax system.
Right.
It's a massive incentive.
In all honesty, if you weren't working with someone who specializes in this like you do, you would probably, if you think about it, in theory, hey, I'm a Canadian. I moved to Costa Rica as this example. I probably wouldn't think to even put it through the U.S. on the way, right? I would have thought to just, either have a bank account, probably in Costa Rica would probably be the default.
Probably. Yeah, that would, or Canada, because if you're Canadian, you might say, it's just easier to leave my business in Canada.
Yeah.
Or you might say the alternative is, well, I'm living in Costa Rica. Let's just register it in Costa Rica.
Yeah. So it seems like you're going to go one way or the other and miss out on an opportunity.
Yeah. But that's why for like digital nomads or location independent entrepreneurs, it makes the U.S. by far the best jurisdiction because like you could go to the UK also, but you're going to pay, like in the UK, they have a company tax that's up to 26% now.
Yeah.
So you would pay UK company tax. Like you can get similar services like banking and payment processing and Stripe and PayPal and all that stuff.
Yeah.
But nowadays, like for payment processing and Stripe and PayPal, you've got to look at it you look at it from reverse. If you need Stripe or PayPal for your business, you have to be in a country, your account has to be in a country where Stripe accepts clients, right? So you have to look at Stripe's terms of service. And in your mind, you might think, well, let me register my company in Belize because it's zero tax. Well, Stripe doesn't work with Belize companies. PayPal doesn't work with Belize companies. There's no decent merchant processor that's going to work with a Belize company because the Belize banking system is trash. They don't want to deal with it.
Right.
So you have to look kind of, how do you get paid from your customer? If I need Stripe or PayPal, I got to be in a country that accepts Stripe or PayPal. If you look across the world of all the countries where you can get a Stripe or PayPal account, the U.S. is the only option where you can register a company with no company tax. It is literally the only one out of the whole world where you can do that.
Well, Bobby, I got to jump on another call.
Sure. Yeah,
honestly,
I get
it. This was so informative, and I interview so many people, and I'm like, I feel like I already know it, and I learned a lot this time. I honestly learned a lot. So,
well, hopefully the listeners learned a little bit too. Hopefully they weren't, hopefully they didn't completely fall asleep.
Yeah. And for people listening, what was the company name again so they can reach out to you?
Businessanywhere.io.
Awesome. Bobby, thank you so much for coming on the show. Tons of value. Lots of people are going to, they definitely learned a lot. And I hope some of them reach out to you to work with you and grow the businesses together.
Cool. Thanks, Glenn. Have a great day.
You too.
That was a nice video. Bye.